Hey Alpha fam, welcome back to another episode of Alpha Commission. Today I wanted to go over a little bit more on my thoughts on KADENA and where I might consider to buy back in. Of course, in the last episode I did kind of leave you a teaser that I'm starting to get interested in KADENA again. I really haven't been trading it that much ever since it had its blow off top. Basically because I started trading it down here when it was 36 cents. And, I really didn't need to, just squeeze out every dollar as it became a falling knife, which most charts did in this downturn. So, I've already extracted what I could out of Cadena. And so that's why I feel like I'm comfortable to talk to you guys about it and just to share some thoughts. But I didn't want to leave you guys just thinking that I was ready to take a full plunge into Cadena. There's a couple things that kind of concern me about Cadena for the long run, which, by the way, I love the project, but I believe it's founded by guys who previously worked for JP Morgan. These guys are smart. I'm not sure they're the most experienced in blockchain. And, one of the things that's a little bit of a concern in the long run for Cadena, even though it is a great project, is that the tokenomics are a little bit inflationary in order to pay their miners, and the use case of Kadena isn't well established yet. And because their fees are so low, in my mind, an inflationary coin that inflates because you need to pay the miners fees, while the fees to use the network and the use cases are low, isn't going to add up in the long run, right? So for the next couple years, you might see the network struggle a little bit if it can't establish its use cases and the reason to own Cadena to use it, right? And of course, this is a proof of work, sort of like Bitcoin. It's a proof of work network, which is something that a lot of people like for security and other reasons. It also has an incredibly fast speed. I think it may be slightly exaggerated, but it's up there with the good ones, right? So again, it's a good project, but I don't want to leave you just thinking that I'm ready to go all in, even if this chart does look like it's ready to make a turnaround. So I'll go through the process of how I would approach this in buying, having traded this chart again throughout this whole history, right? And during that history, we saw a increase of about 6,000% from where I bought in to where I actually sold. And let's see if we take it from the other direction, how much are we down now? We got as low as 84% down, and currently we are 76% down if you bought at the top and you were holding for some reason. So generally speaking, when coins are 80, 90% down, it does become a good time to look at them again in terms of a hold. Now for me, 90% down would be approximately here. I've got this level marked off. It's approximately $2.50. And this whole zone, you know, where we're in that kind of 85 to 90% zone. For me, that's a good value zone to buy into almost any coin. It's just especially when they have the socials that go along with it, where it does have a lot of talk on Twitter and things like that. So without further ado, let me go ahead and turn this off. Let me show you how I would approach this. So first of all, whenever I look at a coin, this is just my style. I really don't see anyone else doing it this way. But what I do is I create diagonals first. I just try to get a feel of what the coin might be doing in terms of its growth. And I do this generally on log scale, although it can be done on a linear scale, especially for newer coins, or if you're measuring just kind of like local price action. But when you're looking at the life of the coin and it's already gone parabolic, as Cadena already has, then I do like to use it on log scale, logarithmic. And so these are the diagonals that I'm seeing. Okay. Now, people can disagree. You can draw these type of origin lines in any way you want, but generally I take a look at the bowl, this kind of like carve out from the investors and whoever was dumping it at first, which the investors, the VCs, they like to take their profit. They like to get a little bit upfront after having invested in the project, so it's understandable that most coins do have a dumping phase before they finally take off and maybe are a little bit better known in the community. And so what we're seeing here really is that fishbowl that's being carved out from that behavior. And oftentimes this may be carved out during a little bit of a bear market also. So it could go a little bit deeper than than it might have naturally gone if it happened to cross over with a recession in the market, pardon me, a bear market. And we do see that this bull was carved out during the bear market in 2021, that kind of a big dip that we had in the summer. And so I've separated this into two channels. One is kind of like an ultra extreme dip, and then the top would be just what I would perceive as kind of like a natural flow of the dip. And I tried to extend that to diagonal supports as I perceive them. And if you take a look pretty carefully, it's not like there's no thought into this. You see a connection point here, you see a connection point here, right? There's a liftoff right here, right? This one kind of bullishly rises above it, but it gets below it. So this is a very significant area. And then on our current chart, we can also see how significant this diagonal is, right? And so when I put two and two together, I can create this diagonal. And then I can also note, these kind of secondary points. Well, this was a very important support. It lifted off the whole chart. So this point automatically caught my attention. I saw we kind of reached for it here. We did hit it here. And again, there was a significant interactions right here. And so I can see automatically that there's this type of a parallel origin line. And then this one struck me as being also parallel. And then we had this point and this point right here. And so that was parallel. And then this also had a little bit of that directionality, right? So you might have to have a bit of an artist eye in order to use my method. I don't think that most people can really do that. So most people focus on horizontals. And certainly horizontals do come into play, but for me, I tend to try to develop this type of exponential and growth-based pattern right from the beginning, just so I can understand what the potential is that I might be getting into, right? And obviously, if it's a falling knife, these lines are going to be downward, and that's going to be a red flag for me, right? So even though KADENA has kind of like this falling knife pattern right now, which it's vastly improved upon, it seems to have recaptured these bullish diagonals. Um, I don't consider that terrible because it does have this overall chart in its lifetime of being upward, and it's above its origin lines that I would consider in a bullish way, and it's also re-grabbed them in a bullish way. And so for me, this is a green flag. Go ahead, take a look at KADENA again. It's stopped becoming a falling knife, and it's getting back on track. And it's also not in these overheated zones where the diagonals, if I were to draw them from here, they don't really attach to anything on the other side, right? So I consider that a little bit overheated, especially if you're, 6,000% up, 10,000% up, whatever, right? And now, of course, because I do things differently, you're probably not going to see another channel using the methods that I use. But so this is very unique to what I do, in the combination of these type of diagonals plus fractals. Of course, I love fractals. So what I've done is I've gone ahead and I've taken two fractals from this formation down here on lower time frames, and I've applied them to the macro chart on the higher time frames. And what I did is I distorted them. I distorted these fractals until I could match the price action in any way. The reason for doing this is to try to determine the psychology of the chart. So the same people, the VCs, the true believers, the community, a significant portion of them, and not to mention the bots that people just develop for, to trade a certain coin, you know, they are sticking with the coin for the long run. There's probably a lot of holders, and swing traders who just feel that they understand the pattern of this coin. People tend to focus on like 5 or 10 coins and they put their expertise in it. And so their psychology sticks around with it. And so if I'm matching, this kind of price action right here, and then the bull, you know, and to the point of recovery, basically, where we get a really bullish confirmation, okay? And by a bullish confirmation, I mean the price action overtook the previous high's price action, and it looks like it wants to continue. So I'm taking a fractal of this and I'm overlaying it on the macro cycle. And what we can find is something astonishing, right? Which is that it does, in fact, match the price action fairly similarly. So I'm not wrong about this. People who've criticized my method in the past and they prefer to use more traditional trading patterns, I think they're missing out. I think they're missing out big time. Of course, it does make sense to use those traditional patterns. I wouldn't discourage anyone from exploring things, like harmonics and other, systems using fibs and all that sort of thing, because those are very important tools, but they are kind of like a one size fits all, whereas this method that I've developed here is really focused on the unique fingerprints of any particular coin, and you're almost building an algorithm for that coin itself. And so here, I don't want to bias myself to one specific fractal. Um, orientation, because in the beginning of this coin, it was just going down, right? It was just a falling knife in the beginning. And also it reached this section where it was in the bear market. And so it may have been dramatically pulled down in a way that other coins might not have been. And so there may be some exaggeration in it. So I'm creating two instances of the fractal. One is a bullish iteration, and the other one is a bearish iteration, okay? And so again, the price action, look here, right? A peak, fall, kind of the spikiness, another dip, a super peak, right? We got a super peak right here, a dramatic fall, some type of choppiness, a couple pops up, right? And then after these, 1, 2, 3, 1, 2, 3 pops up, what do we usually get? I mean, not usually, but what did we get on this fractal? We got a dramatic fall. So when I told you in the last video that I'm almost ready to buy back into KADENA, what I really meant to say is that I'm not buying back into KADENA unless I have some type of bullish confirmation. Okay, because this is my method. You can use other methods. I do see it as just bullishly retracing because we are making these higher lows on the real chart, not the fractal. The fractal was headed towards a down market, right? And there wasn't really the support for KADENA at that time. And I'm not sure if I should say it as KADENA or KADENA, but I kind of like KADENA better. But if you were to look at this chart, you might say, okay, well, we've got more of a bullish posture than we do on these fractals. And so, while we can look at the bearish one and just trying to fit it, the best we can into two things. There's a reason why I do these diagonals first, is because I want the bottom of it to sit into this, the well of it to sit into there. So if we do have a crash in this market, let's say that the entire market goes to hell, then what I'm going to want to do is make sure that I'm going to want to make sure that my price action, my assumed price action fits the narrative of a, you know, of a market crash, sort of like what we had last summer, right? During these times. And so for that extreme, I need to use these diagonals. And if I'm keeping the price action fairly similarly and not distorting it too much, right? Because I can control how this goes, how I outline this fractal. It is an art. This is not mathematical. This is an art. It's just your human brain doing calculations subconsciously. And if you're not good at it, you're going to suffer in your trades. So I don't recommend this method to everybody. I'm just saying I do have that kind of artistic eye. I'm definitely not the best artist or anything, but I do have an artistic eye. And so this is the method that I employ because it works for me very well. And so here in the bearish area, I've fit the fractal to fit the top, these type of peaks generally. I know that we're moving a little bit bullishly in KADENA right now. And in the past, when the VCs were just dumping, of course, it had a bearish posture. And so I'm also going to look at a slightly more bullish consideration where maybe we're not going to dump as hard as we did in the, when this fractal was first developed, when this psychology was first in the market. Maybe we have a little bit more support than back then. And in that case, I've developed this more bullish orientation, which stays in kind of like this above the bottom of the cup, but still represents the cup, right? And so if I take a look at this one, then what you can see is um, I have made a little bit room for it to start to break down, but still holding this type of support, which again, that was fairly significant support. We did see nice reactions here, and then it was only up from here, right? So let's say that that type of support holds, then we'd probably be talking about this diagonal channel, and these might be areas that I'm looking to buy up. Okay, so now I can employ my traditional horizontals, which everyone else uses, right? This is probably their go-to first. And for that, I really don't employ the daily or the weekly so much. Generally, I'm using the 5-day just as a good shorthand for both of them. And so on the 5-day, I've marked off the supports. And, I'll often use the monthly also on longer charts, but the 5-day works pretty well for me. And so this is what I'd consider to be good buy zones in the green, and then good sell zones based upon the history of this coin. Well, for the history of this coin, you can see we're kind of in that sell zone, to be honest. If we have a bear market coming up, I really don't want to be buying at these levels. This is kind of like overheated levels in my mind, based upon my fractals, based upon my diagonal channels. It's just a little bit overheated in my mind, okay? And so, I don't need to necessarily be buying at those prices. But the reason why I told you I'm getting interested in KADENA again is because we did wick to this green zone, and then we caught support where we started to crawl up uh, these horizontal supports that I've marked out. And you can see, look, we actually had a perfect sell zone here, perfect sell zone up here. We had a perfect buy zone here, and a perfect buy zone here, and a perfect buy zone here. And I didn't use this price action to determine that. I used the 5-day chart. This is the 4-hour, but it's been pretty reliable. Maybe there's something to this little midsection here that could be marked off, but it's not super important. If you grabbed here and here, you would have made a lot of money, and if you sold here and here, you would have been in great profit. Okay, you don't have to hold this forever. You can just sell these supports and resistances. However, what happens if the market really turns down? Okay, if the market really turns down, then I have obviously this kind of bear market zone where you can see there's no real good place to sell in this area, right? I don't want to sell this. I believe in this project. I think KADENA is gonna just survive, and at least it's going to reach its previous all-time highs, just in my opinion. Um, Tokenomics aside, use case aside, I would expect this coin to recover as a layer 1, as the team is fully funded and they're making, they're working on it. There's things still in development. I don't think the coin's just going to die. And so if I was able to catch it in this area, I would probably want to hold on to it until we get back up to these levels, in which case I'll start to take my profit again and just play it by ear, okay? The people saying that KADENA is going to reach, $100 or $1,000 or whatever, because look at this price action. I mean, come on, guys. Like, a lot of you guys are kind of crazy. Like, you don't know what's going to happen in the future. Take your profit when you can take it, and have some money in your wallet. I know some guys who, when I was selling up here, around, $26, $26, wherever that is. Yeah, $26. I was selling at like $20, in this type of zone. I think I sold some here at 17 after rebuying here. I was saying, take your profit, take your profit when you can take your profit. But they just continued to hold all the way down, 75% down, and they're still holding. It makes no sense. It really makes no sense. This coin doesn't care about you. None of these coins care about you. Um, you have to take care of yourself. So, for sure, the people who are dumping, they're not caring about you. And, so take your profit when you can. But if you can see how this chart moves, again, we have this bearish area here. So I'll just show you the boxes for buying and selling that I've set up. And it's essentially like this, okay? So I had a buy zone here when we got into this purple area, just because we had put in a couple higher lows and a higher high. And so it was worth just taking a chance, because you could assume that we were going to have at least one more higher high, and that would be the point to offload it, right? This was kind of like a short-term trade zone in this overheated area. But then the long-term buy area would be right here, where you're just going to hold it until you get back into these zones. It could take a year. You could drop to hell first. Nobody knows. This is just a DCA zone, okay? Like, we're really close to these overheated zones. This is just a DCA zone. This is like a local trade zone. This is DCA zone. Around here at approximately this, $5, and it's just approximately $5, right? And then up here is approximately like, let's just say 680, 675. And then selling somewhere around, 950, let's say, right? And if you ever have the chance, you can hold on to some and see if you can sell it at, $20. But generally speaking, if I was buying in these overheated zones during a down market like we're in right now, where the whole market is overall down, then I'd be happy to sell anywhere between $9 to $10 any chance that I got. If I was able to buy, around $5 and I was able to sell around $10, I'd take that trade every chance that I got, okay? And so you can decide for yourself whether this makes sense for you, but for me, that makes sense. Now, in terms of hodling, in terms of the hold, where would I prefer to be buying? Down here. I don't really want to be holding, these high prices too long. Uh, you know, we can consider that $5, it doesn't sound like that much, but again, it's still like 1,000% up, right? I want to be buying more at these reasonable levels where, it kind of, you know, a couple 100% up after it had completely bottomed out, and similar prices as to where it was launched and caught support, and just had this type of kind of logarithmic growth, right? But I want to do it in a value zone, not in a not in kind of like an inflated way. Not sure why my diagonals are getting distorted here. may just need to modify them a bit. And so what I've really laid out here is just my bearish buy box. And you can see if this market collapses to hell, right? If instead of making higher lows, which we could come back to this support area, like we could just trade in this zone and then go up. But if we break down from this zone, then I'm probably going to want to start DCAing in under $3. And probably $2 is probably where I'll want to buy the majority of it. And if I could ever catch it for under $2, yeah, I'd definitely take it. I'd be a little bit concerned if this chart started to break down below that. I would just want to do research and see what's going on, because that would be quite an extreme breakdown, right? We're already almost 85% down from the top, currently 75% down from the top, and this would represent 90% down. 90% down is a good place to buy coins when you're buying in a bear market, when you're buying in kind of a recession, and if you want to just hold them for a long term to make massive gains, right? And so what would that represent if we just got back to our previous all-time high? Another 1,000% growth. Hey, pretty good. It's not 6,000%, but that would be pretty good. And even if you got only halfway there, right? Still do a 3x, right? Get back to this trading zone. So I consider this a very safe level. I just wanted to put that out there because, again, I shouldn't just cavalierly mention things like I'm considering to get back into a coin. Some of you guys might think that's like a go signal to just go buy you know, as much as you kind of imagine that I might be or something. But again, I'm not an expert in these topics. I'm not the most experienced with all of this. I'm learning these things and I'm developing my own systems in order to be effective for how I trade. And I'm not trying to give calls. I'm not saying that KADENA is going to go to $100 or whatever, like these kind of like, Looney Tune moon boys. I mean, it may. It might. It might pull off a Luna. The devs might make this into something amazing. But I'm just looking at the chart and, trying to be realistic from my own perspective. And, if we put on these fractals again, it is interesting. It is interesting how these things sort of work out. It's funny how it kind of almost suggests a crash to come up in, maybe, April or May. It's kind of suggesting that April or May might be the best time to buy. Whether it ends up being here or here, it's suggesting that April to May is going to be the best time to buy KADENA. And it's just interesting that the rest of the market looks like it might have a big crash around that time, right? Bitcoin, as I've showed you in many episodes, is threatening to have a crash, and the stock market is threatening to have a bigger crash. And these things are looming over us within maybe a month or two away at most. If they do happen, of course, there can always be a recovery. Of course, the government can always come in and inject, some type of new policies or something. But even though we're having kind of a green day on the board for coins, I do consider this to be kind of a reaction rally. We're not really out of the woods yet on the Bitcoin chart. We're just in that same area, that same exact area. And if we break down from this type of support, Bitcoin could see 30,000, it could see 25,000, it could even see 20 to 15,000, which I personally don't think is super realistic, but I do believe it is actually possible, like a wick there. If we do have a total market collapse in the crypto industry. And so, hey guys, I just wanted to give you my thoughts on where I'd be buying KADENA, and to not leave you, thinking that you just had to like buy a whole bunch today, because that's not how I think. Now you know how I think, and it's a little bit different than other guys, but it works. Okay, it works for me, and so that's your alpha for the day. Stay safe and happy trading.